of our presenters during the break, as I always do. And this one I found really interesting. I was also very interested that there weren't anyone with placards out the front today that bothered to read the program for today. The Wilson's boys are looking, trying to figure out what the heck I'm talking about. We're going to go to New South Wales. So back to your particular patch of the wood. Okay, so we're going down to New South Wales. And this next presentation, our first one for this segment, is bringing back to life an old mine to assist with the energy crisis and the transition to renewables in the short-term future. So this is one of the lowest cost underground coal mines. It's ready to go, high value, potential high returns, and low development risk. There's a little bit of upside there for investors, I have to say, looking at it. What are the cons? We're going to find out. Would you please welcome up to the stage Ms. Ayten Saridas. Ayten is the Chief Executive Officer for Australian Pacific Coal. She's got the odd 30 years of experience behind her, and she believes that this is a good thing. So let's hear what she has to say, see if it solves a couple of problems and maybe bumps up your investment portfolio as well. Welcome, Ayten.
Thank you. Hi, everyone. Hopefully you've all been well fed and ready for the next session for the afternoon. Look, before I start, I think it's probably worthwhile for me to just give a little bit of a backdrop about the energy crisis and the shift towards renewables in the future. Now, we're not here to debate climate change and whether you believe in climate change as human-induced or not. That's not what we're here for. What we're here for is about the transition and how we make that as smooth as possible for everyone around the globe. We are a coal company. We in development at the moment. We will have production towards the end of this year. It's a thermal coal mine, for those who know the difference between thermal and met. This is used in the production of electricity. And as we all know, energy transition has caused quite a great disruption in the market. And with the prices that we're seeing, there has to be something done. And this is why you've seen over the last 2 years, the price of coal, whether it's thermal coal or met coal, has gone through the roof. And a lot of coal miners have made a lot of money because the market wasn't ready. They thought the transition would happen quicker than it actually is happening. And when I talk about the transition, I don't think that we will see coal out of the environment for another. So in that context, I really want to start the presentation about why Australian Pacific Coal is reopening a mine that's been shut since 2006. Anglo-American owned the Dartbrook coal mine. If we can go to the first slide. Anglo-American owned this thermal coal mine. It's in Newcastle. And it was shut in because they had some technical issues, but also coal prices were at rock bottom. So they shut it in, changed hands a number of times, and then AQC bought it some time ago. It's been in care and maintenance ever since. Last year, we embarked on a project to actually bring this mine back to life. I'll go through the geology in a little moment and the infrastructure that's there, but it is the most closest source of new supply of the Newcastle spec coal that will hit the export market this year. It's in the Hunter Valley region. It's called the Dartbrook mine, and we are close to infrastructure, and we've got a 5-year mining license to mine till 2027. And I'll go through the details of the coal mine in just a moment. The project itself, if we look at what are the key drivers of it, it's a good quality thermal coal resource. The specifications for this has a direct market in Japan and Korea. We have 370 million tonnes of this resource that's marketable. So assuming we can mine this for 3 million tonnes a year, this mine could keep going for another 100 years, potentially. The production potential that we've got on this mine is we will start slow. It will be a bord and pillar mine, We will have about 1.7 million tonnes of production next year, ramping up to 3 million tonnes of production at the peak levels. The infrastructure around this area is also proven, it's established, and thanks to Anglo-American, when they built this mine, the infrastructure around it, they gold-plated it, and it's been kept in pristine condition. So in terms of development, if you were to start building this mine from scratch, you're probably looking just for the wash plant, replacing it for about $400 million. That's just the wash plant. We can reopen this mine for $120 million Aussie. And the reason being, the infrastructure is already in place. Now, looking at this graphic here, I'm going to try and use this pointer if I can. This land is owned by a company called Chapman. What you'll see here is an underground tunnel. Now, this is all underground mining, by the way. In the Hunter Valley, you'll notice that there are a lot of mines that are open cut. We don't have a license to do open cut. This is underground coal mine. This is a tunnel that was developed. The wash plant is here, and this is the New England Highway. This tunnel, when it was shut in, they not only threw in a lot of junk, but they also let the water fill this mine up, this tunnel up. So since January this year, we have been working on dewatering this tunnel. It's about 57 megalitres, if you can imagine what that looks like, of water that had to come out of that tunnel. A lot of people would see the risk in this and say, it's too hard, we're not going to do it. We were bold enough to say, we're going to give this a shot. And our team have now dewatered this tunnel. I actually walked most of the way the last time I was there. It's quite a long trek, but we've dewatered this tunnel. So in terms of milestones, we've achieved one of the biggest milestones that people said we couldn't achieve. We've got the infrastructure as well. So, go back to this. Over here, we own the land. The wash plant is here. This is the plant that if you had to replace it, we've got an insurance valuation replacement value. It's about $400 million. There's the Hunter River here, and we've got some box cuts around here. These seams here, when Anglo were mining this, they looked at mining these seams below. We are mining the upper seams. Now, why is that relevant? It is lower cost. It's close to the surface, but these seams here are the same seams that everyone else is mining. It's a proven geological resource. So we're not uncertain as to what this coal might look like. We already know the specs of the coal. In terms of the coal reserves itself, we'll get yields probably around 70%. So whatever we produce, 70% of it should go to market. We also believe that based on our new mine plan and our studies that we've developed, 25% of this coal will be suitable for the met coal market. The rest into the thermal coal market, but 25% should go to the met coal market. So in terms of the project itself, again, we are targeting production. We are starting production in Q4 2023. We've made significant progress in this year. AQC has been funding the development costs till now. We've dewatered the tunnel. We've got a new mine plan with significantly improved yields, and it is a low-cost OPEX mine. It's around about $60 Aussie per tonne, and that's just to the mine gate. If you add roughly $20 for port and rail, you're looking at $80 to low $80 Aussie dollars per tonne. So if you have a look at where the thermal coal price is trading at the moment, I haven't had a look today, but say it's $130, $140. That's US. There's significant opportunity here for us to make a good return. The challenge for us is to get this mine open as quickly as we can. The next critical milestone for us is actually the funding. So we have put in place a joint venture agreement that is now bedded down. AQC holds 80% of this asset, and Tetra, who will be the operator, will own 20% of this asset. We'll ramp up production next year, and we expect to hit 3 million tonnes in a short space of time beyond that. The mining lease, which at the moment is only till 2027, we've already started engaging with the government to extend that licence by another further 5 years to 2033. So potentially, we could have a 10-year life on this mine, and we have to only spend 120 million of capital to actually get it running. We'll obviously have stay in business capital, but they will be funded through operating cash flows. As I said, to date, we've been funding 100% of this project. And the next milestone for us is to actively work towards getting the 120 million into our accounts. And I can't say anything more about that, but hopefully we will have some announced shortly. But we are working very aggressively to get that funding in place. In terms of who's funding it, there's a lot of debate about whether there's still appetite for coal. The reality is when you are making the kind of returns we will be making from this asset, there's still appetite. Yes, we understand the ESG concerns of banks, etc., but there's a lot of private money that also appreciates that you can't switch off the tap. In this transition, we still have to keep the lights on. So there is still a place for thermal coal projects. Now, the government won't allow greenfield projects, but this is not one of those. It's a brownfield project. So we're in a fortunate position that we don't have a lot of the baggage that comes with new projects. In summary, if you want to have a look at this asset now, I'm not sure if anyone here is a shareholder at the moment, but we've got a project here that is a low-cost opportunity. It's a known product that has already a market in Japan and Korea. So we don't have to find customers. They're already there. As I said, it's low cost. The infrastructure is in place. We have the rail loop. We can connect to the port and rail efficiently. The infrastructure's there. We don't have to build anything. It's also a significant resource. So subject to what happens, there's 1.2 billion tonnes of resources that can be mined at this site, and that's underground mining. If we were to do open cut mining, we're talking 2.5 billion, but we know the government has ruled that out in New South Wales. So as an underground coal mine, it's still 1.2 billion tonnes of resources with 470 million tonnes of reserves. So that's quite significant. As I said, this mine could keep going for 100 years if there was a need. It's a well understood geology as well. We're mining the same seams that everybody else is mining. So it's not new territory. It's not virgin coal seams that we're mining either. The fundamentals for thermal coal prices in the medium term to long term is actually quite strong. As we transition, less supply is coming onto the market. Supply comes down, demand at the moment hasn't come off. So we saw thermal coal price at $400 not too long ago. Will it hit those peaks again? I'm not sure. But there is a sustainable price, and this is my own personal view, of having coal prices above $200 in the medium to long term. And on that note, I think we've got a page here on the management team. Look, I'm new to the board. I came on board last year. We've got a refreshed board and management. So if you've known about AQC in the past, we've got a new management team on board and a new board, and we are look forward to meeting you soon. Thank you.
Thank you very much, Ayten. There's all sorts of interesting opportunities, and that could be an interesting short-term one for you as well. We're going to move from coal and go across to lithium now. Aldo Boitano is going to join us up on stage, Chief Executive Officer of CleanTech Lithium. They're an exploration and development company with 3 licensed projects in Chile. It's advancing the production of green lithium for the EV transition by using innovative direct lithium extraction technology, which is only used by a handful of companies, and CleanTech Lithium is one of them. They're actually, who follows Canaccord Genuity? Anyone follow them? They actually chose these guys as their top lithium stock, which is interesting. We'll find out why, I'm sure, over the next 15 minutes. They're listed, if you'd wanted to get on board, they're actually listed in London. But in the coming months, you tell us. Would you please welcome Aldo, everyone?
Thank you so much. Well, we're working, you see the ticker there in London and other places. We're going to do a listing, ASX listing, in mid-August. We have already 35% of our stock here in Australia. So our projects are based in Chile, where I'm based. I'm one of the two co-founders. From day one, we were aiming to be one of the greenest lithium producer of the world, using the brine that is in subsurface aquifer of these three projects that we have, extracting the brine with a direct lithium extraction via resin, and then re-injecting that back to 100% of the spent brine without the lithium back into the subsurface aquifer, and using renewable energy as well. Why do I care so much? I'm a kind of a famous mountaineer in Chile. I've been in expeditions around the world. I'm a civil industrial engineer and have lots of titles, but this is a very precious area in the 4,400 meters, the two projects, Laguna Verde and Francisco Basin. And the idea is to help the world on the transition to electric vehicles, and at the same time produce green lithium and preserve these places. There's 6,000 meter mountains there, and the highest volcano of the world. I'll stop pitching about mountaineering and we'll go into the presentation. We listed 15 months ago our name. We have these two projects more developed, 2 million tons of resource of lithium carbonate. Chile has 40% of the world's reserves in lithium, is the second producer of the world. Australia, with only 8% of the world's reserves, is the larger producer of the world of lithium. We have a greenfield project up north in the Yamará project. Is a big license, 344 square kilometers. We were elected not only by Forbes as one of the top 4 picks for this year from lithium, and mining.com on the top 10. Canaccord Genuity and Fox Davis are our brokers, and Canaccord also took us as the top pick for this year. The listing is going to be done here by Canaccord and Fox Davis. We have a new appointed director. Today is his first day at job with us from Australia, and we're going to be based in Perth. We were the top IPO of the UK the previous year, and that was basically because we got listed when the Russian-Ukrainian war started. And out of the 21 companies getting listed, we were the only ones who survived. Regal Funds is our largest shareholder. Again, 35% of our shareholders are from Australia. So lithium, I don't need to stop here so much. The demand is going up and everything, but again, sustainable lithium, it's a path to go forward. These are the projects, Laguna Verde. We have a flow of news in the next 3 weeks or so. We'll have an updated resource of the 4 from the 4 previous drills that we did in black dots, and then the 2 ones that we did this year, plus all the work we did with hydrogeology and re-injection. We are doing environmental studies. The scoping study will come out and will be part of the listing here in Australia. The scoping study, and already we started the PFS with Wheatley. It'll be finished at the end of the year. One of the only listed companies who don't have an offtake agreement. We finance by ourselves with 22 million pounds. And out of those, we have half of what the latest raise we did back in October of 12.7 million pounds. So we're going to come listed here with money. We aim to raise plus minus 40 Aussie. And this is one project. The projections of Canaccord and Fox Davis talked about 540p. And again, we're listed now, our price is around 40. Francisco Basin is going to be hopefully a big surprise. We got 500,000 tons of resource here. And both basins are controlled completely. A lot of people talk about direct lithium extraction, but you really need to control the basin to be able to talk about reinjection, and you have to have a very good hydrogeological model to be able to do that. Again, you take the spent brine in one place of the subsurface aquifer, and you reinject it in another part of the subsurface aquifer. You can stop at our booth and look some more, and I'll explain a little bit more further in the presentation. Yamara is the greenfield project. It sits on 1,000 meters. The reason the 4,400 meters is important for us, because there's limited flora or fauna, and there's no indigenous communities on site. We've worked with them in an early engagement program. When we got listed, it was me and myself and the board. Now we're more than 30 people in Chile, including community managers. And they are 2 hours away, 2,000 meters below. What we have a very good relation with them, and they want to be part of the project. Yamara again sits at 1,000 meters. What you're looking down below is the geophysics. That low magenta color signifies low resistivity or high conductivity. They're reciprocal numbers. And that allows you to see where the brine is. We're currently drilling at 450 meters right now, and we have good initial TDS, total dissolved solids, who gives an idea that there's good brine there. This could be a game changer because the massive area that we control the southern part of the basin with 344 kilometers. This geophysics data was obtained by an oil and gas exploration done by the government for 20 years. We were looking for lithium a month and a half ago, and we hit gas. And now we had to change to another location. We'll leave that gas for a further conversation with ourselves if we develop that or not. To be the greenest lithium producer of the world, we'll put most of the money in the ground and to develop the projects, again, with 30 people on board. Our executive chairman, who's a British person, Steve Kessler, he developed the 2 largest projects of the world in copper, Escondida and Collahuasi, from the early stages all the way into financing with the Japanese backing of Sumitomo, Mitsui, and Mitsubishi. We don't have any offtake agreement, like I said. We're working to finish the PFS stage with Worley in the most developed project, Laguna Verde, and then we'll engage with these companies in more formal conversations. We have NDA with more than a dozen companies, battery producers, car producers, big mining names, and traders from various countries. This is the DLE. Again, you take the spent brine from a subsurface aquifer 80 to 100 meters below. You take a resin, an organic resin, to strip the road off, and then you re-inject that spent brine, and then you use industrial water in the area to take that lithium out of the eluate that it forms. The overall process needs 1.45 liters per second for a 20,000 ton per year production. So 2.2 kilos of water for 1 kilo of lithium. That's many, many times less than evaporation ponds, the traditional way of extracting lithium out of brine, and a lot less, sorry to be here in Australia, than what you need to extract lithium out of rock in the way of spodumene. There's an excellent infrastructure in Chile. We're one of the premier mining jurisdictions of the world, along with Canada and Australia. And Chile is, again, I said, it's 40% of the world's reserve. We've been in the front of the news of the nationalization of the lithium industry. The government in Chile controls Salar de Atacama, owned by the government, 100%, rented to SQM and Aldo. They have shown their intention to get into that contract, who expires in 2030 in the case of of SQM, without, of course, modifying the contract. SQM stock took a hit and then went up because they can have a way of extending their lease. Aldo, the expiration of their contract is 2043. Then the 2 copper entities of the government, Codelco, a producer, and Enami, who has smelters, and they created special lithium projects. They own completely 6 salars. And we are talking to one of those 2 entities on having a joint venture for developing those salars. And then it's us, we're the most developed project in Chile, controlling two whole basins. Chile has 85% of its free trade agreements with 85% of the world's economy. Independent central bank, $30,000 per capita income, a higher life expectancy than the US. By the time we got listed in London, a lower risk than the UK, who was having a series of prime ministers in those days. And there's nothing such as nationalization, a bad press. We hope to tell the market fairly soon how our conversations are unveiling and the path for our forward, not only with our projects, but with the government salaries, who they say they lack resources, both in the human resources and capital to develop them, and knowledge. We were the first ones who, when we started in 2017, working on the lithium extraction, and the government has said that that is the only way forward in the case of Chile. And we have already a pilot plan and working towards developing, by the time we commission a larger pilot plan in July, 1 ton per month to send to the battery producers. So by the time we're producing lithium in 2026, they really have used and tested our product. We already have produced 1 kilo of battery grade lithium certified in Germany. Like I said, a lot of work with the communities. Our board, most of our board is from very respected international people, including our new board member from Australia, Tommy McKeith, Steve and Johnny McCorley from Jersey, and then our CFO based in London. All the money is kept lightly in London. We have to do a cash call and bring the money with approval for fund released every month. We're having international company auditing everything. But again, most of the money has come to the ground. There's no bonuses for anybody in the company. Everybody has premium, 20% premium stock options once they work with us enough. And we all have the same goals to be able to get those, an ability to exercise those stock options. So we need $400 million for every 20,000 ton per year production plants that we think we'll have. Two of them, Laguna Verde and Francisco Basin, have more than enough to produce 20,000 tons per year for the next 30 years. You already saw the net present value of Laguna Verde is $1.83 billion. So we aim to finance this mostly with debt and with the offtake agreement that we plan to have in the future. Why invest in us? A proven team. Evaporation ponds take 2 years to come into production. Direct lithium extraction takes 9 months to come into production, and then the production of lithium comes within hours. We are working closely with the local government at the local level, with the Chilean authorities at the central level. We have all these strategic partnerships that we keeping warm, that we aim to bring in the future. And we're going to have the Australian market, who's very savvy. Sorry to talk about London. A lot of times it's Lithium 101. When I came to Perth and Sydney, it was more about the company, the people who are running it. You guys are very savvy and know a lot about lithium, and we expect to grow the company here and learn from what you're doing. And again, stop at our booth, and thank you for your time.
Thank you very much, Aldo. Peter is sucking up to us, calling you savvy. Do you consider yourselves savvy investors? Like that, just play on that. We don't mind it. Right. We are going to, this fellow's a lovely fellow. Look at him as he comes up here. He's a mild-mannered accountant. Does he look like a mild-mannered accountant to you? He is indeed. He gets a lot done, though. Really good human being. Not that keen on rugby league, I'm told, if that's going to be his downfall. He doesn't mind cricket, though. Not enough to keep him up last night in the middle of the night, but he was pleasantly surprised and excited when he got up this morning and heard the results. So that's the main thing. Now, this is Emmerson Resources Commercial Manager. His name is Rodney Wheatley. So Emmerson Resources is leading the way. They're utilising cutting-edge technology across the Tennant Creek mineral field, which of course is in the Northern Territory, and also they are in the New South Wales Macquarie Arc. the New South Wales, you're doing it there as well. And what they're doing there is they're identifying gold and copper deposits. And they've got they had some really exciting discoveries in 2022, and that is bringing them a very exciting pipeline of activities in 2023. Let's make him welcome and hear the rest of the story.
Good afternoon. Great to be here and great to be able to provide an opportunity to give an update on the activities at Emmerson. So Emmerson, we're a copper gold exploration company. We've got significant land holding in Tennant Creek, Northern Territory, and also copper gold land package in Macquarie Arc, New South Wales. We've got a history of delivering, of making successful discoveries. We've made a couple over the last couple of years that I'll talk to during the presentation, one at Hermitage and also at Golden 40, and also provide an update on our drill program we did at Keola. Also, we've got a really good joint venture structured in Tennant Creek that enables us to add value that I'll talk through during the presentation, and that allows us to focus on our 100% owned tenements there. But what's our strategy is different to normal exploration companies. Most exploration companies, their aim is to explore, discover, then develop, mine, and then produce and then operate mines. What we do is we stick to what our strength is, which is exploration. So we go and look for the ground, explore, make discoveries, and then we look to flip those projects for a royalty. So currently with our joint venture partner, we've got a really good 6% gold royalty production attached to the joint venture, which I'll talk about as well. And also I'll talk a bit about our aggressive campaign of exploration we've got in the remainder of 2023, which is some phase 3 drilling at Hermitage, also some exploration drilling programs in our joint venture tenements in Tennant Creek, and also some follow-up work at New South Wales. So just quickly on New South Wales, we're located there in the black outline. We've just done some drilling down Keola, which is only about 50 kilometres south of Cadia, Newcrest or Newmont's mine there. Also, we've got some early stage project at Wellington, which is about 50 kilometres south of Alkane's Boda discovery. With Keola, what we had to do is we actually had to do a 3D MIMDAS geophysical model because there'd been no previous drilling in the area. There's no outcrop, so we needed something to be able to guide us to enable us to put together a drill program. So we did this MIMDAS survey about 5 kilometres from one end to the other, and that helped identify where our Keola program would sit. We centred it around that Dolly's North prospect. And what we did is at the end of April, we completed a drill program, 4-hole drill program, combination of RC and DD diamond drilling, testing for porphyry copper gold mineralisation. One of the best holes there was this intersection. It's only at 580 metres, so very shallow for this district. The Cadia mine, they're operating underground at the moment at about 2 kilometres, so very shallow. But what we did do is we were able to intersect approximately 100 metres of mineralisation in 2 skarns. The top skarn encountered chalcopyrite, those top photos there. And then the bottom skarn, we hit magnetite, chlorite with chalcopyrite as well. So these skarns are a very common feature of the big porphyry districts in the region. And what we're going to do is we're waiting for the assay results. They're still at the lab. We're expecting them back before the end of the month, and that'll then determine our next course of action at Keola. Just turning our attention across to Tennant Creek. So we've been up there since we listed in 2007. We think we hold some of the best ground up there, a vast area, 1,700 square kilometres. That's us in the circle there. All that area to the right has all been pegged in the last couple of years. So there's been a lot of activity in the area, and a lot of the big players are up there actively exploring. BHP, Rio are above us, and Newcrest, Newmont. So very exciting times in the area. Just zoning in on our tenement package. So the blue and the yellow is under joint venture with our JV partner called Tennant Consolidated Mining Group. They're a private group. The structure of the JV is they'll spend $10.5 million over the next 5 years to get a 75% interest in the tenements. If during that time we have a successful discovery and we can put together a mineral resource estimate and a positive conceptual study, those deposits then get flipped to a small mining joint venture. When that happens, TCMG are responsible for that project then on. So any costs, any feasibility, any development, any mining, processing, all their responsibility. And what we get is a 6% gold royalty. So we're the owners operators of the exploration joint venture, and they're the operators of the mining joint venture. So currently we've got 2 projects in that small mines up in the top in Mauritania, up there, 29,000 ounces, and then also Chariot, 139,000 in the south. But also what they're doing is they're bringing a CIL processing plant from the East Coast and putting it into the Tennant Creek area. Currently the assets in Tennant Creek have been stranded. There's been no mill in the area for a number of years. So this is really going to unlock the value in some of these stranded assets. The red up the top here is our 100% owned tenements. And I'll just talk a little bit about Hermitage on there. So into 2021, we had a spectacular discovery. It was ranked globally one of the best copper intersections in 2021. This is in our 100% owned ground. What we hit is 116 metres at 3.4% copper and 0.88 grams per tonne gold, and spectacular results. And then the hole had to be terminated. We hit a fault, but we went through some malachite into some native copper, and we ended up in chalcopyrite. So that was the end of 2021. We came back mid-2022 after the wet season to try and pierce that fault that we hit. We were able to do that with a diamond scissor hole. And that had, again, spectacular mineralisation and a great hit. We had 94 metres at 2.7% copper, 5.6 grams per tonne gold, silver and bismuth as well. Now, I just want to highlight just down the bottom, we had just above the fault line, we had 4.8 metres at 19% copper, 214 grams per tonne gold and 103 grams per tonne silver. So spectacular. We're able to pierce through the fault, and we hit some chalcopyrite mineralisation under the fault. So this is just a long section here. The blue is the hosted magnetite. As you can, it's open along strike. And what we're going to do is we're going to do a follow-up drill program, phase 3 drill program commencing next month. That's going to test what's below the fault. So the fault is that little red line there. We're going to see where the mineralisation has been dispersed with the fault previously, and we're going to try and test for that more high-grade pod just above the fault. And also we're going to look at the extensions that are open both to the west and the east. So just to give an indication of how tough it is in the area, Tennant Creek mineral field is really high grade, but they're very small on surface from a plan view, very pod-like structures. So some of the historic high-grade mines there at Warrego and Nobles Knob, they're only on 200-metre spacing. So you can easily miss it with a drill program. So what we've had to do, and over the number of years, is we've pioneered exploration and used different scientific methods of trying to find what we think is at least another one of these big deposits in the area. So what we've just done is we've just completed 2 10,000-kilometre drone surveys, mag drone surveys. These are not your typical fixed-wing aero mag, which is sort of flown on 50-metre spacing and about 50 metres above the ground. With a drone, you can fly 15 metres above the ground on 15-metre spacing. So the results are significantly better. And that really assisted us when we put together our drill program with our joint venture partner on our Golden 40 joint venture ground. So we drilled this at the end of last year, and we had some significant results there, the best being 28 metres at 28 grams per tonne gold. And what we also had, we found extensive extensions to the mineralisation to the north, and also we announced some really good results at Golden 40 East. So what we're going to do is we're going to go back there later this year, and with our joint venture partner who will fund the drilling, we'll go and test some of these extensions, and the idea will then be to come up with a mineral resource estimate, do a conceptual study, and the idea is to flip this project from the exploration joint venture across to the mining joint venture. So just quickly, a little bit about the company. Very well funded. We've got 6.4 million in the bank at the end of March. With most of our Tennant Creek assets under joint venture, this means the money only has to get spent on Hermitage and Edna Beryl in Tennant Creek, and then also at New South Wales. So we've got a pretty low burn rate. And I just want to highlight the graph down below here. This is the worldwide gold royalties across the world. And that's where our 6% gold royalty that we have in place sits. So, really a well-structured royalty. Just quickly, a little bit about our board. Bit of a change here with our managing director since we listed back in 2007. Mr. Robert Bills left us last Friday. His last day was. The good news though is he's staying on as a non-exec director. So his IP and knowledge will stay with the company to come. So I'd just like to take this opportunity on behalf of Emmerson to thank Rob for all his work and tireless effort since the company floated 15 years ago. And he's a very, very passionate man on exploration, loves his exploration. And the work he's done at Tennant Creek in New South Wales has been phenomenal. He's left the company in a very good shape, so which is testament to Rob's efforts. We'd also like to welcome our new Managing Director, Mike Dunbar, very technically capable Managing Director. He starts with us next month, so we're really looking forward to working with Mike and moving these projects forward. So catalysts and the value drivers for the remainder of 2023 in summary are, number one, it's getting our joint venture partner to get that mill across from the East Coast and bringing it across and constructing it in the Tennant Creek area. That'll unlock all those stranded assets. Secondly, it's our multiple drill programs we've got going. First one, which is on our 100% owned ground at Hermitage, which we're starting next month. And then we'll follow that up with some drilling in our joint venture projects at Golden 40. And also then it's waiting the results of Keola, which we're hoping to get before the end of this month. That'll then determine our next activity at Keola. And also it's continually to build and grow our emerging gold royalty business. This has been, in the North American market, really like this strategy. They like that low risk strategy that goes with a royalty business. So we've been working over in the North America with some companies on that, and we're looking to continue to build that part of the business. And it's very exciting for us. And again, we're very well funded. We've got super strong shareholder support. So we're looking forward to the rest of 2023. Thank you.
Rob, thanks. Which drones are you using? Who are the drones that you're using? Where do you get your drones from?
A company called AirGeoX.
Okay, AirGeoX. I was carry on, you can walk when our next sort of walking out. I was just in investment opportunities for you. I do some work for a company called Stockhead, and I did two really interesting interviews this year. One with a company called Quickstep. Have you heard of them? They're doing carbon, so making things out of carbon fibre for the aeronautical industry. And one of the companies that's using the parts they're making are making drones, and they're called Carbonics, making these long-range drones and drones that are doing this sort of survey. They're interesting ones, just even if you're not investing in them, just to hear the story. And particularly Quickstep, because it's an Australian manufacturing success story, which you don't really expect in this day and age. There you go. There's some useless information you possibly did not want to know, but I furnished you with anyway. This fellow you want to know more about. Now, this is interesting. Let me stand up and introduce him, because as he walks up here, this is the youngest company. Remember I said to you before lunch that we were going to have up here the youngest company at the conference in 2023. Well, this is them, Lithium Universe, represented by one of your own. This is a local boy. He's a mechanical engineer, and he's here today in his role as CEO, Alex Hanley. Do not let the baby face fool you. He has got a decade or so of experience underneath his belt. He's just holding his age particularly well, bugger. He's well versed. He knows his stuff. He's actually schooled me on a couple of things already, i.e. I cannot say just rugby. I have to say Rugby League West Australian, otherwise I'll get belted as I come off the stage next time. So this is Lithium Universe's debut into marketing the company. So we are the first people to hear this presentation and to hear a little bit more about it. Now, there's a fellow sitting up the back there who perhaps was involved in lithium a while ago, who I suggested to you has come back in and brought his team with him. And this fellow here is part of that team. You're going to explain that, I'm sure. So there was an IPO, it's underway. Apparently nipples may still be possible if you like what Alex has to tell us. So please make him welcome, everyone.
After a 10-year hiatus, a new lithium company emerges from the galaxy. Introducing Lithium Universe Ltd, building a lithium future. If it sounds like Galaxy 2.0, you're right. The lithium trailblazer is back. Iggy started his time with the commissioning of the lithium carbonate plant at Greenbushes before moving on to spearhead Galaxy Resources from a $10 million market cap to a valuation of $2.5 billion at merger. The Iggy Tan is recognised as one of the first mining executives to recognise the lithium ion future, and it has built the first fully integrated mine to refinery project, consisting of the Mount Cattlin spodumene project, the Jiangsu lithium carbonate plant, and also spearheading the project generation for Galaxy Resources and picking up the James Bay lithium project and the Sal de Vida brine project in Argentina. The Mount Cattlin spodumene project is a 1 million tonne per annum mining operation, producing about 140,000 tonne per annum of spodumene concentrate. The spodumene concentrate is then shipped to the Jiangsu lithium carbonate plant in China, which has a nameplate capacity of about 17,000 tonnes per annum. And to this day, remains to be a benchmark for process technology and quality output. As you can see here, Allchem has since taken over the Mount Cattlin project, and notably, when Iggy commissioned this plant, the spodumene concentrate was around $260 a tonne, now trading at $4,000 a tonne. On the right-hand side here, Tianqi picked up the Jiangsu lithium carbonate plant, and at the time of commissioning, it was around $6,000 a tonne for lithium carbonate, now trading upwards of 41,000. And this provides a bit of context of the vision and foresight that Iggy had within the early stages of the lithium industry. Also joining Iggy is Greenbushes veteran Pat Scallon. Pat ran Greenbushes mine for 25 years, both overseeing major expansions as well as day-to-day operations. He joins the team as a board advisor, having obviously ran Greenbushes, the highest grade and biggest lithium deposit in the world. He brings a very extensive skill set to the group. So our flagship project is in Canada. Why Canada? To provide a little bit of context, Australia produced 300,000 tonnes of lithium concentrate in 2022, just under 50% of world supply. What we've actually produced in WA specifically has provided a foundation pillar for the lithium ion future and the lithium ion supply chain in China. On the other hand, in Canada, there has been little to no production out of Canada, but is one of the most fertile regions for spodumene concentrate and mineralisation. So what we're seeing now is an influx of skill sets and resources from the more experienced WA and companies now making their way to the new frontier in lithium. And as Mr. Lithium once said, Canada wants to be the Australia to North America. A few words from Iggy. Lithium projects are taking too long to come online, and there is not enough coming online to meet future demand. Investment in Canada has been substantial, yet no lithium has actually come out of the country in the last 2 decades. And lastly, there are many lithium explorers, but none have the experience to actually build projects. Introducing the Apollo Lithium Project, situated in James Bay, Quebec. The project is 240 square kilometres, about 60 k's south of the Trans-Tyger Highway. When this was staked by a partner, it was about early 2022 when the lithium price was really finding its feet. And at the time, it was pegged between 2 up-and-coming explorers with big land holdings within the region. So I encourage Iggy to come up and talk about his vision for the company. And in doing so, I'll leave you with these 2 quotes. We're not here for exploration's sake. We're here to build a lithium project as soon as we can.
Thank you, Alex. So why did I get involved in lithium again? Well, this is a fantastic project. This is the Apollo Lithium Project. As you know, I'm familiar with the James Bay area. There were 2 unexplored exploration companies when it was pegged, and this is the company. Have you heard of Patriot? Well, it's the Corvette project. The market cap of Patriot is nearly $2 billion. On the other side is a company called Winsome with the Ayten project. So only 28 k's away, all right? So the Apollo project is actually bigger in area than the Corvette project by 26 square kilometres. We're in the same greenstone belt. So I'm not a geologist, but we're in the same greenstone belt. Let's look at some of the drilling that's happened around us. Now, in order to understand drilling, I'll just give you some context. These are average drill results around the world, according to SMP. In Australia, you might average 10 meters at 1.45%. In Africa, it goes up to 58 meters at 1.4%. And then in the US, 34 meters at 0.29%. So the grade drops because they tend to pick up the clay deposits. In Canada, the average is 21 meters at 1.5%. Now, this is a rule of thumb that I use. Any drill result that is more than 10 meters with better than 1.1% is a pretty good drill result. Anything more than 30 meters at 1.3% is an excellent result. So let's look at what happened around us. This is the drill results of Corvette. 156 meters at 2.12%. 152 meters at 1.2%. And then on the other side at Adena, we've got 93 meters at 1.28% and 170 meters at 1.34%. So if you use the rule of thumb, they're not great, they're not excellent results, they're outstanding results. And this is the benefit of the James Bay area in Quebec. Very high grade, thick mineralization and close to surface. The other big attribute of the area is they tend to stick out like sore thumbs. This is an outcrop at CV5. So they tend to stick out. And the other main important thing is the spodumene tends to be very coarse, which is very good. Now, let me explain to you why they stick out. This is the Allcam deposit, and you can see the mineralization rise up to the surface and they stick out as outcrops, right? The beauty of this one at James Bay is they tend to be bunched up together. So it makes mining very simple. It's a strip ratio of 3.5 to 1. You can see the pit that Allcam is designed makes mining very simple in these sort of areas. Okay, we've got 17 of these outcrops. We haven't got to the ground yet, but you can actually see it from space, all right? And our team have been on site to look at them. And this is the Trans-Tyger Highway. And when you get on site, we can actually see some of these outcrops. Okay, so what has the market cap of these companies done when they've discovered these? As I said, Patriot has a market cap of 2 billion. Winsome has risen and their market cap is about 350 million. We are going to relist in August at a market cap of $12 million. So you can put those two together. Now, let me talk about coarse spodumene. This is really interesting of how we process material from Apollo. Coarse spodumene, as you can see there, it's very simple. You want to crush the material to liberate the spodumene from the ore, okay? And in this instance, because it's coarse spodumene, you can just use crushing. You don't have to grind it down to very fine particles. And through dense media separation, you can remove the spodumene from the waste. So this is the Allchem Mount Catlin. They're using the same design at James Bay. So it's just a dense media separation plant they're using at James Bay. So the ore tends to lead to simple dense media. The coarseness of the spodumene has been reported around us. So Corvette has reported very coarse grained spodumene. Winsome has also reported very coarse grained spodumene. What that means is that when we actually get to processing it, it makes it very simple. If you have a fine spodumene, this is an example of a fine spodumene, you actually have to grind it down to very fine particles and then use flotation to separate the material. And the problem when you have fine spodumene, it has increased capital costs and operating costs. So the good news is that the James Bay area doesn't have that problem. All right, bit of trivia. The 1992 Dream Team, who can name somebody from there? Michael Jordan? Magic Johnson? Scottie Pippen. So this is the 1992 Dream Team. Well, ladies and gentlemen, this is the Lithium Dream Team. We have the people that ran Mount Catlin. Terry Stark, who is the general manager of Mount Catlin, James Bay, is back with us. Dr. Jinwan Liu, he's the leading expert in lithium. He knows everything on processing of lithium, lithium carbonate, lithium hydroxide. Roger Pova ran Mount Catlin. He had history of Greenbushes, and Hugh is the guy that built Mount Catlin. So we've got the dream team to build a lithium project. And we got the young legs like Alex to do it. Now, in a typical project, how long does it take to get product out from first resource? Well, when they go through all these processes, maiden, scoping, PFS, DFS, funding, it generally takes a minimum of 8 years. Well, at Mount Catlin, we took it from first maiden to first product out, including the construction, in less than 3 years. And we have the dream team to do that at Apollo. So this is the problem with Canada today. The projects take too long. There's no production coming out of Canada. And there's a lack of experience at the lithium explorer level, okay? How are we going to solve this problem is the Apollo processing hub strategy. And what we're going to do is we are going to collaborate with the lithium juniors around us. Lithium juniors are good at exploring, but they don't have the experience like the dream team. So what we're going to do is we're going to work with them, and essentially we're going to offer them offtake agreements where they can just ship their offtake to us, the run of mine to us, and we'll build a concentrate. So essentially we offer them a 5-year offtake deal. We buy the run of mine material. It brings their cash flow forward so they can develop their mines. And for us, they don't even have much capital cost because you don't need to crush it. We will build the concentrator and the crushing unit, a standalone multi-purpose concentrator based on the Mount Catlin design. And when they're ready to develop the project, we will then joint venture with them and build a concentrator for them, okay? So what we're doing is starting an engineering design to build this standalone multi-purpose concentrator at Apollo. It's going to be based on a dense media separation plant, 1 million ton per annum, 4-stage crushing, very similar design to Mount Catlin. So that's the, and what happens after 5 years, when these juniors want to develop their concentrator, we would joint venture with them and build that concentrator using the same design that their ore has been processed with. This removes the risk for the junior, and what it helps us is that we benefit because we get to market faster. Thank you. Have I finished? That's it. Thank you.
Now, do you have a closing remark? I'll give you one. Give you one closing remark, Iggy. Please fuck it off. Okay, that was fine. You have to go and speak to him out there. That's very unlike you to be so well behaved. Thank you, Iggy. You're obviously blown away. Thank you so much. Interesting. And you heard it first here today. So there's a great insight. Now, another recent listing, but not as freshly minted as Lithium Universe and the Dream Team. 9 months old, though, Critical Minerals Group is next up on stage. Scott Drelincourt, come and join us, sir. He's giving his claps to Iggy and the team on the way through. He's the MD. Now, the opportunity here is a battery mineral development company focused on meeting the growing demands for minerals critical to a carbon neutral future. And if you believe the media, Critical Minerals has, and I quote, the white hot battery metal space by the horns with the promise of the latest metal du jour, vanadium. Vanadium is the new black. Make him welcome, everyone, please.
Very good. Thank you all. Thanks for the great introduction, and thanks for having me follow Iggy. Let me introduce you to Critical Minerals Group, vanadium, what we're doing, and why I think we're a great value proposition. Read that at leisure. It's on the ASX. You can download that. So what we're trying to do is produce critical minerals for batteries that are going to drive a sustainable future. And that's really what we're all about, is to drive that transition. So the company itself, corporate snapshot, we're about 21.5 cents today, so still above our listing price. We've got a significant JORC resource at surface, 363 million tonnes at 0.43%. We've now also included alumina to that, so we'll be looking to produce high purity aluminium as well. We'll talk to that as we go forward. We've got strong support with the strategic investor. We've got Idemitsu on board, holding about 32% in our shareholding. That's a pretty big coup for the likes of Idemitsu to come on board. We'll elaborate on that a little bit. We've got significant government incentives supporting us and developing our projects and the region as well in the vanadium space. And the project development's already underway since listing. We've started our metallurgical work, and the scoping studies recently commenced as well. So Dream Team number 2, sorry to steal your thunder there. Our chairman, Alan Broome, Order of Australia Medal for his services to mining, advisor to CSIRO. Myself, I'm a geologist, having worked in the vanadium space for about 8 years now. Art Malone, non-executive director, the CEO of Idemitsu on our board, Steve Kovac as well, and Stuart McClure, who is a founding shareholder as well. So why Critical Minerals Group and why vanadium? Well, we believe, and pretty confidently, that vanadium is going to play a pretty significant role in the energy transition through vanadium flow batteries. The batteries themselves have a superior life, being 30 plus years. They don't degrade, they can hold long charges, they're non-flammable. No offense to anything else there, but as a grid scale solution, that's pretty stable to have for firming up the grid. And a point to note about vanadium flow batteries is one of the largest batteries in the world is a vanadium flow battery already. It's in Dalian, China. At the moment, it has 100 megawatts, 400 megawatt hour capacity. They're going to look to double that this year. And to put that in context, that would contain about 9,000 tonnes of vanadium. So that would probably represent about a 1.5 year production from a site when we get this up and running for one battery system. So we can look to do all this in Australia as well and try and firm up the grid here and drive the energy transition. So we believe vanadium is going to play a significant role. And you'll probably hear some murmurings from the state and federal government next week at the World Mining Congress on vanadium. So vanadium supply and demand, particularly in vanadium batteries. The graph you see here shows the demand for vanadium batteries alone on projects that are forecasted or already lined up for commissioning up to 2031. And the growth rate on that is, I think we've got 41% year on year compound to 2031. So that's a significant change in the vanadium demand. So where's all the vanadium coming from at the moment? Well, 60-odd, 5% odd is coming from China. Approximately 20% is coming from Russia, a good chunk from Africa, South Africa. So we've got to try and firm up what supply chains and global security around that energy as well. So we think we can do that in Australia, bring that downstream and develop that all in Australia. So our flagship project is the Linfield project. That's the southernmost tenement you see there, intersected by road and rail at Julie Creek on the Flinders Highway. The road and rail there goes directly to the Port of Townsville. And we'll talk about there what's happening at Townsville as well for us and other vanadium proponents in the area. I did touch on, we have a JORC resource. We recently upgraded it only about a month or so ago. It was a 73% increase in tonnes and a 10% increase in grade to bring it up to where it is today. And we also now have, as I mentioned, aluminium oxide in the resource at 4.8%. Now we were looking to produce the HPA as a waste stream of the vanadium production. It's shallow as in, it's at surface, it outcrops at surface, and we only have the resource going to 30 metres. Anything below that, we're not considering part of the resource at the moment, we've got enough. We've already started the metallurgical work on the HPA. This, and probably a point to note, to mention for vanadium and this whole region, which is the Tullabut Formation, is that whole region geologically is very amenable for battery grade vanadium because it doesn't have the other contaminants that the hard rock vanadium deposits typically have, which you have to just process out, which is just more cost prohibitive, that's all. So that gives this region and geology a big advantage. So local infrastructure, as already mentioned, we've got road and rail, access to port, to the Port of Townsville. But what you'll also see up there in red is the Queensland Resources Common User Facility, which is all government funded for all of the vanadium proponents to run a demonstration facility, which we'll talk about very shortly, and the other government's incentives. This is just a cross section of our resource, and what gives this the upside again, this geology over other styles of vanadium deposits is it's oxidized. It's at surface, it's soft, so it's friable. You can crush it in your hand, so no drilling, no blasting is going to be required. Obviously, the depth advantage and strip ratio is going to be pretty significant. It's about 10 metres odd thick, approximately across, and the grade is very homogeneous and the thickness is very homogeneous. So yeah, it does have a significant advantage, therefore, on the OPEX and then leading down to CapEx advantage as well for this style of geology to produce vanadium for whether it's steel market, vanadium flow battery markets or alloy markets as well, but we're looking to produce it for the battery market. So I have mentioned a couple of times now about the tailwinds from government support. So we've got a vanadium processing pilot plant. This is federally funded, getting built at Brisbane Met Labs, $1.21 million. That's about 3/4 built now. We're just waiting to work through our metallurgical work to finish off those designs. So fully funded by the federal government, we'll run our material, which I've already got through that pilot plant this year. When I mentioned before, the Queensland Resources Common User Facility, that is the vanadium demonstration plant, which is a $75 million fund funded by the Queensland government. So they're going to look to produce tons of end product material that we can look to, if we haven't done by then, send around the world to lock in our offtakes. And other vanadium proponents in the area can do the same. So we will be looking to be one of the first users there. We're also partnered with a National Battery Testing Centre, which I was out there yesterday. And we'll be looking to supply them with vanadium precursors and also doing some work with our HPA as well to look for how that might work with anodes as well. And couple that with graphite. And then to sort of tie it all in all the way down to manufacturing, all the way from upstream, midstream, downstream, and manufacturing, the federal government's committed at the end of last year. So there's been a fair few announcements since, and obviously this week in critical minerals, but the federal government's committed $100 million to battery manufacturing in Queensland. So we're going to see a big push in this space in the next 12 to 18 months. And you'll probably, like I said, you'll hear more noise and news about it next week at the World Mining Congress as well, from state and federal. So the progress so far, look, as mentioned, we listed September last year. So into that listing, we secured Idemitsu, we listed, got out and did our drilling straight away, which was 23 core holes, and converted some of those to water monitoring holes, planning for our feasibility work, environmental work. We've got our copper and gold tenements granted as well around in Cloncurry, which I'll touch on at the end. We completed the drilling program within that time as well. We got some other tenements granted and applications put around our flagship at Julia Creek, just to bolster up our resource presence behind our flagship. Commenced the metallurgical work, vanadium and HPA, resource upgrade, as I mentioned, and now we've got the scoping study underway. So we'll look at pit designs, etc. there. So in a very short period of time, we've made some significant progress, and we'll continue on this pretty aggressive pathway through development. So this is just a little cross section, a section of the Linfield project where the resource actually is, and just wanted to point out, probably coming from the exploration story now into the development story, but when we did the drilling, every drill hole intersected the vanadium deposit at shallowness, shallower than we thought. Every drill hole had vanadium intersections higher than we hoped, and that's why we're able to get our grade up 10% and our tons up 73% as well. And we've also intersected aluminium oxide and roof through the seam pliers as well, and then the floor. So we've got an opportunity to blend that in with our waste product as well, to up our HPA tenor as well when we need to. A point though, within the actual resource there, so you've got the purple shows the inferred, yellow shows the indicated, and you can see some of the outcrop in the middle there. I'm not doing a little laser, I think, yay, there, a little bit there. There's a quarry out as well, an outcrop there as well. I think I've got a picture of that, I think, at the end. But within that area there, so we've got an area that's, what, 128 million tonnes at 0.48%. And that's pretty significant, again, within the resource. So we've got a higher grade at very shallow as well. So as we work through our scoping study, we'll see how influential that is as well. Yeah, we do. So this is some of our core and some of the outcrop in the quarry within our tenement. We can see that core there showing the limestone showing embedded, which hosts the vanadium, correlates with that upper unit. The next unit there is the same unit then, just more shale dominant and therefore more vanadium rich. Is this unit here, and you've got a pure shale and a mudstone floor. But you can see it's soft, it's friable, you can see it's palladium breaking apart, and you can imagine how easy it would be to be selective mining or bulk mining if you wanted to along the strip mining process as well. So I did mention we do have a couple other projects as well behind our flagship. We do have copper and gold plays out at Cloncurry. First one I'll just lightly touch on is Fig Tree Creek, just south of the Great Australian Mine, which has just recently been purchased by True North, and I think they just listed this week. There we have a historical mining lease in the southern portion there that was never exploited. It's a dead lease now. That has the same geophysical and electromagnetic signature as the Great Australian Mine. Both projects have a plethora of copper and gold anomalies from surface sample, chip samples, etc. But there is not one drill hole ever put on this Fig Tree Creek, and there's 3 holes within about that spot there that show mineralisation and at sub-economic levels for copper and gold there. Other than that, no other drilling, which blows my mind for the region it is and for the anomalies that's been picked up, whether it's electromagnetic, geochem that shows copper and gold anomalies as well. So we'll go out there and look to do some work there. I'll touch on that at the moment. Right. So where to? I've shown what we've done. Where to next? Well, the greyed out area is what we're already at. So we'll look to complete the first phase of our metallurgical work in Q3 this year, feed the remaining results of that into our scoping study and have a pretty robust and deep dive into that. We'll following that work, we've got all our bulk material from our drilling. We'll look to feed the pilot plant later on this year as well, and also commence the exploration work out at Cloncurry, which is just to go out and do more detailed analysis of the geochem and some more sampling really to identify our drill targets. So I'd say for our value proposition, what we've delivered in our short period of time, the support of our strategic investor, I'd say we're pretty good value proposition. Our market cap is probably sitting around $10 million, and where we're going to take this company. And thank you very much for hearing me.
Well done. You absolutely nailed that at the end. Well done to you. Up next, our Gold Coast Investment Showcase, Glenn Grayson. He's joining us in his role as newly appointed MD of Aruma Resources. Glenn is a geo by trade. He's got an impressive skill set built up over years of experience in the game, appointed to drive Aruma to the next phase of evaluation and development. Now, they've got 3 gold projects on major gold endowed structures in Australia's gold hotspots. They'd be in Western Australia, of course. Glenn's focus for today, however, is the progress that they're making at their Mount Deans lithium, correct? And also the very early stage saltwater RE project, which is in the Pilbara and also the Salmon. You're going to add the Salmon Gums Gold project in too? All right, he's got 3 and you've only got 15 minutes. Please make him welcome.
All right. Thank you very much, Chrissy, for that intro. Yeah, as explained there, thank you for coming to listen to me. I guess what I'm trying to achieve out of Aruma is a diversified exploration company, and we are focused on driving some shareholder value. That's a typical disclaimer, competent person statement and looking forward statement. And a corporate snapshot. So the thing I like about this slide, it's only 200 million shares on issue, or just less than. Early this week, trading at 4.8 cents for a market cap of just under 10 million. But we did do a raise earlier earlier in June, and raised $2.3 million. So that's just been put in the bank. So we've got plenty of cash to explore with $3.4 million. A great point that I like to make is our R&D claims that we make each year. We have approved projects that we claim against for the 12 years that Aruma's been working. We've managed to get back $5.5 million from the government, and I certainly hope to get back another $800,000 or so later this year. But what that means is we spend our money about 1.4 times into the ground, which is pretty good shareholder value, and allows us to explore well. So these are my projects. So I've got 5 projects up in the Pilbara, up in the northern part of Western Australia. I've got saltwater, which is becoming a rare earths plus project. So there's base metals as well as gold, and Melrose closer to, or past Paradiddoo, which is a gold project. Down in the Yilgarn, I've got 2 gold projects, one at Carter Well near Mount Magnet, and further in the south closer to Esperance in Salmon Gums. And then last year we drilled our lithium project at Mount Deans, and that certainly got us a bit of attention last year. So what sets Aruma apart? So we have a geological model that we target areas that we like to go exploring in. So it's our gold in sediments model that our R&D claim is against. But we go and look for patches of ground that we think have either been underexplored or overlooked for various reasons. Examples of these are our Mount Deans. Knew there was tantalum-rich pegmatites outcropping, but had never been assayed for lithium. Saltwater, a really remote part of Western Australia where some local prospectors have been finding some gold nuggets in the creeks up there. Pretty much not explored for anything except a bit of uranium a few decades ago. Salmon Gums down in the south was always mapped as part of the Albany Fraser zone for the non-geos. That's not part of the Yilgarn Craton where all the main gold deposits are. And Carter Well was always also incorrectly mapped as granite and not greenstone. that's examples of why we peg ground, because they're underexplored for various reasons. I'll go through three of my projects that I like better. So I'll zoom into Mount Deans, which is just south of Norseman in the goldfields. So it is in the lithium corridor of the southwest Yilgarn. Pretty simple geology. It's pegmatites in a basalt, and it sits about 200 kilometres from the deep sea port of Esperance. So logistics wise, it's got a local mining town nearby and a deep sea port. As I said, there was some exploration done for tantalum in the noughties. In fact, Tantalum Australia had a resource there, but we drilled it last year and assayed for lithium, and we got some nice results there. So grades up to 2% lithium oxide with some high-grade rubidium as well, so 1.5% rubidium. But what comes with that is other metals as well. But we got intersections 8 metres at 1.1% lithium oxide, 5 metres at 1% lithium oxide, 5 metres at 1.2, so really consistent grades. And what we found is they're sheeted veins, so they're quite consistent. They dip together. There's two mineralised pegmatites, and they work quite well together. But along with the nice grades of the lithium, we've got some really high cesium, tantalum, tin, potassium, 10 metres at 0.2% cesium, another 6 metres at 0.2% cesium, as well as 7 metres at 405 ppm tin, and 6 metres at 400 ppm tantalum. And what's exciting about that tantalum is half that grade is economic. So if I can get a resource grade of 200 ppm tantalum, the tantalum will pay for the mining and the processing. So all these other things in there at Mount Deans with the lithium all create exceptional value. Point I do like to make is it's not a spodumene ore body. So the lithium I have at Mount Deans is lepidolite. Lepidolite's not the sexy hard rock mineral that West Australians like to go and mine, but it is really important to understand and note that globally, a third of lithium is sourced from spodumene, another third is sourced from brines, and the remaining third is sourced from lepidolite. So lepidolite is a really important source of lithium globally. So this is what the Mount Deans process would look like. I've been doing some metallurgy study work on making a concentrate out of the lithium micas. I've been successful getting about a 3 times upgrade to date. I hope to improve that. But what it's also done is shown that the tin and the tantalum liberate quite well. And I've got grades up to 6,500 ppm tantalum in a concentrate through another step of gravity separation. So all these steps show that Mount Deans could show exceptional value. Jumping up into the Pilbara, it's the 2 projects I have there. Melrose is close to the old Poulson's mine that Northern Star run and now Black Cat Syndicated are working on. And you can see both projects are adjacent to the Nandjalgardi Fault. Nandjalgardi Fault is the main mineralising structure in the region, probably controls upwards of 5 million ounces of mineralisation. Kalamazoo have just upgraded their resource there to 1.5 million ounces or so at Mount Olympus. Further to the west of that map, east of that map is the Carla Winter deposit that Capricorn are mining currently. So it's an exceptional structure that controls a lot of the mineralisation. But I'll zoom into saltwater. So saltwater itself is about 150 kilometres to the southwest of Newman, so really remote part of the country. 400 square kilometres of tenement here. Was pegged for gold. As I said, local prospectors were finding gold in the creeks up at saltwater. But about 10 or 12 years ago, a company by the name of U308 were doing uranium exploration and discovered some high-grade rare earths. Along with rare earths, there's usually radiation. So the thorium was used and they found Levanto and Sirius, so 11 and 9% rare earths. And at the same time, U308 worked on the Nobby's prospect. So there's 3% copper there, 1.4% lead, 2 grams gold. Saltwater is where the nuggets in the creek were found. And then more recently, our neighbours at Dreadnought did some grab samples near Monster here and come up with nearly 12 grams gold, a heap of silver and a huge amount of antimony. And what that antimony says is that you've got a huge juicy system that's flooded with metals. They also were successful in finding some heavy rare earths in the middle. And that's really gave us momentum to go looking for the heavy rare earths, but also the base metals. So this is a tenement map. The green shows you Dreadnought, that's the Bresnahan project. But I'll point out in the red there is a company called Bresnahan Exploration there. It's a subsidiary of Wesfarmers, and the blue is Tech. So these are all pegged and come in since sort of the middle of last year. So it is really a spot where some people who know what they're doing are really focusing on and exploring. Some field work up there recently, went up to the Levanto up here. That's a black manganiferous shale with a hydrothermal quartz breccia. And below the breccia, you find the high-grade rare earths. That's Tim, my senior geo. We were up there 2 weeks ago, and that's near saltwater here. Again, the same manganiferous shale with the quartz breccia. And we're waiting on the results from that field trip to come back from the lab at the moment. So that's the model we're going with, which is an unconformity model. Worked really well at Browns Range for Northern Minerals. But the model is that it's similar to the gold sediments model in that these are sedimentary basins, and the marine or the salty seawater has been pushed up through the pile of sediments, grabbed the metals out as it's come up, been trapped by the unconformity at the top, and then it's found its way to a reactive part of the stratigraphy that sucked the metals back out of the fluid. So that's where you go looking for the quartz breccias and below the quartz breccias. So the potential of saltwater is enormous. And we'll just skip back down to salmon gums. So this is 100 kilometres north of Esperance. It is wheat belt. I do have to work around farmers cropping. But again, the reason I pegged this was mapped incorrectly. So the Cundalee Fault on the maps here was also always the southernmost extent of the mapped Yilgarn. Below that it was Albany Fraser Zone. Pantoro mining their Scotia project. South of that Cundalee Fault definitely is Yilgarn mineralisation, Norseman greenstone. And we followed that south and drilled Thistle and Iris last year and had some pretty successful drill hits with the 5 at 50 and 4 at 4 in the bottom of an RC hole in Thistle in the middle here. We did follow that up with some drilling in April. We did extend the mineralisation. We weren't successful in finding the high-grade gold. So the plan going forward with salmon gums is to really zone in and target that high-grade Thistle zone with the 5 at 50 and try and understand what the high-grade gold is doing and see if we can map some and model some structure there to drill. So that's my highlights. They're the 3 projects that I really find exciting. Company metrics, so we've got strong upside, market cap of $9.5 million with 3.4 in the bank at the moment. We do actively drill, as I said, well-funded. Results, we have success, so we've shown that we've been successful with our Mount Deans project with lithium and salmon gums. Certainly hope to repeat that with the work we're doing up at Saltwater. All our projects are in Western Australia. It's just an easy place to do work, great precinct, and we are multi-commodity focused. So previously, Aruma had the blinkers on for gold, certainly not gold any longer. Although I am a gold geo, I like gold, but it's the lithium and the rare earths have really taken our attention. A new team, so I come on board in January, as Chrissy said earlier. Really excited to see what we can do with Aruma. And Tim started as senior geologist for me at the start of April. So building some knowledge that we think we can really understand our ore bodies. And the R&D gives us the ability to spend our money 1.4 times. I think we're a great potential. If you want to talk more, come and see me booth 16. But remember, Aruma, it is an Indigenous word that means happy place. So thank you very much.
Okay, that's really neat. I like that name that you've chosen. That's a really cool one. Thank you so much, sir. Well, we'll see you out at the booth. Right, up next. Are you all okay? I want a little bit of a stretch. Yes, I promise you a fantastic morning tea. And if you do at any point over the next couple of days, for those of you who are new, you'll know me. If you want to get up and move around and stand at the side of the room, for goodness sakes, please. I would much rather you were moving around, and our presenters would much rather you were in the room and moving around and listening to them as well. So please don't feel like you have to sit there motionless the entire time. The aim is to listen and hear the opportunities. All right. So next up is Dreadnought Resources, and there's something a little bit interesting going on amongst its team members, because the founders, a couple of the founders, Paul Chapman and Dave Chapman, I checked. Apparently they're not related. There you go. Oh, there's a Chapman up there speaking. So wait for it. So giving us the company update today is a young fellow called Nick Chapman. He's the company's senior exploration geologist. As he comes up here, we can ponder this question. Don't tell them, is he related to either of the other Chapmans? You'll have to go and have a chat with him at the booth afterwards and find out. Regardless, it's obviously a name that's synonymous with visionary resources explorers. So to use a geology parlance, as I introduce this young fellow up the front here, this is actually Nick's maiden presentation. I could use the V word, but we're choosing the maiden one. So he's done his research, he's collated the results, he's going to outline the opportunities for us as investors. Would you please welcome Nick Chapman?
Thanks, Chrissy. That was an awesome little intro there. Paul wishes he was related. Before I get started, I just want to play a little video to show you what Dreadnought's all about. So please strap yourselves in, grab some popcorn and enjoy.
And as Dean Tuck, Managing Director of Dreadnought Resources. What makes us unique as an exploration company is that we are a young and hungry team. We're not a lifestyle company. We have boots on the ground. We're constantly putting out news flow, delivering exciting targets, drilling those targets, and when we're lucky, delivering the discoveries that go with it.
It's been great to see us go from having a few projects across WA to now having 5 major projects with Mangaroo, gold and nickel, Mangaroo rare earths, Kimberley, Ilar, as well as the Preston Hand project as well.
Favorite thing about working for Dreadnought Resources is working with like-minded people who are ambitious and like to get things done.
Every day is different. Every day we see something new, and every day is exciting.
Get out in the field a lot, get to work with lots of young, passionate geos. We have a lot of fun.
Being able to work all over Western Australia with a really good group of mates and hopefully discover the next big deposit.
At our heart, Dreadnought is an exploration company. We will continue to deliver organic growth, generate new projects, define targets, test those targets, continue to deliver the discoveries to provide the metals the world needs for our future.
Excellent. That was a brilliant little video. Thanks to the team at Canning's Purple. So good afternoon. My name's Nick Chapman. I'm one of the senior exploration geos here at Dreadnought Resources. We're a rare breed at events like this. We're usually more comfortable about 800 kilometers inland, covered in dirt, sweat and flies. I should have known there was a catch when Dean asked me to join him in the Gold Coast. Yeah, our Managing Director, Dean Tuck's alive and well. So if you want any more information on what I'm about to touch on, then please come join us at the booth. Disclaimer. So I've been around at Dreadnought since 2020. I've seen it grow from a $5 million company to what we are today on the back of acquiring multiple different projects and making several discoveries across a range of different commodities. We're explorationists. We acquire large strategic land holdings in prospective regions. We define good targets. We test these targets in the aim to make discoveries and generate shareholder value. And we've proven that we can do that and we believe that this is just the beginning. We've got a highly talented board and management in Paul Chapman, Philip Crutchfield, Robert G. We've recently acquired a new CFO, and Mrs. Debbie Fullerton. We're primed, we're fully funded, and we're ready to advance our projects. Speaking of which, we've got 5 major projects across Western Australia. These projects total about 14,000 square kilometres. Dean wants boots on ground. He wants us running around. I don't have the exact stats on this, but we could be the fittest team on the ASX. So the first cab off the rank, the one that's garnered most of the attention in the past year, is the Mangaroon. We've got 5,500 square kilometres of ground in the Gascoyne region of Western Australia. We've pegged along the major crustal scale structures, which are highly prospective for rare earths, for nickel copper PGEs, and for gold. These all occur within 50 kilometre strike of one another. We've got the rare earths to the southeast, the money intrusion, the nickel copper PGEs to the northwest, and the gold in between. So I'll touch on all of them, but I'll start with the rare earths. So Luke and the team first stepped foot on this outcrop in 2021. I remember being here at this conference last year, and we only just put the first couple of holes into the ground. We had no assay results. Since then, we've gone from discovery to resource in just 6 months. We announced our maiden resource on the ironstones in December for 14.4 million tonnes at over 1.1% TREO. This resource at Yin covers just 7% of our currently identified ironstones. The first pass drilling has been completed here, and we'll keep growing this resources as the assays keep flowing. The Gifford Creek region contains the world's highest NdPr ratios, and not only that, Yin itself is the thickest and highest grade deposit in this entire region, and these high grades outcrop at surface. We've studied the mineralogy. We know it's amenable to processing. We've recently gained some more met samples from our drilling, and we've got over 85% recoveries, which is exceptional. It's a third, if not higher, than the majority of our peers in this space. So stepping out a little bit to the carbonatite intrusions, we believe these are the source intrusions of the entire region. We've identified multiple nested intrusions that have retained thick mineralization. The opportunity here is similar to significant deposits of this type, like Araxá in Brazil, Mount Weld, Mountain Pass. Like these deposits, we've identified rare earths, phosphorus, niobium, titanium, and scandium mineralization. We've only conducted preliminary drill testing over 2.5 kilometers of our 7 kilometers strike extent of these plugs. Our first pass drilling at the carbonatite extensions are underway, and we'll look to put out a resource in the coming months. So to wrap this up, we remain on track to deliver 20 to 30 million tonnes of ironstone resource. We've got the highest grade material in the entire region, and these high grades outcrop at surface. We're on track to commence our scoping studies, and we're targeting a resource update for Yin in July. We're targeting our maiden carbonatite resource for the carbonatites in September, and then we're looking to put out a resource upgrade on the ironstones again in the December quarter. So moving on to the nickel copper PGEs. Early on, we identified the money intrusion. This was a 50-kilometre long mafic ultramafic intrusion with these large nickel copper sulfides outcropping at surface. The age of this intrusion is similar to Jinshuan in China, and the tenor of these sulfides, if they accumulate in a massive, is akin to Eagle in the United States. This prospectivity sparked the interest of First Quantum, a large Canadian base metal producer. We've entered into a joint venture. They're required to spend an additional $12 million to acquire 51% of this project. We've got rigs mobilizing there shortly to conduct our follow-up program after the success of our inaugural program last year, where these nickel copper sulfides were intersected. We've got 5 high priority conductors to test here to see if we can pinpoint the high grade accumulation of these sulfides. On the gold front, Dean gave us a book, Gold in the Gascoyne. It described the life of Alan McDonald, a local pastoralist who discovered the Star of Mangaroon gold mine in the 1950s. The Star of Mangaroon was the largest historical gold producer in the region, which graded ounces to the ton. This hasn't been drilled in decades. Along with these other prospects, this region has been completely forgotten about by explorers. Well, not anymore. We're the first company to ever consolidate this region, along with these several other workings. The star has only been drilled to a vertical depth of 100 meters. The mineralization is open in all directions. There's one drill hole down deep, which confirms that this thing extends at depth. We see the star as having a Penny West-like potential. Our senior in charge of this area, Sam, has been uncovering high-grade gold and silver rock chips. He's been a very popular man. There's a lot of value to be added here. We've recently flown an airborne magnetic survey. We're completing target definition work as we speak. We're identifying the prospective structures, such as the one that hosts the star, and where we can find repeats of these undercover. So we'll be drilling this and the other workings in the coming weeks. So moving on to a project that's close to my heart. This is the project that drove me to join Dreadnought in the first place. This is Dreadnought's flagship project up in the Kimberley region of Western Australia, much akin to the Mount Isa or the Cloncurry region here in Queensland, with green copper-stained ridges and these outcropping gold copper veins. The project was off limits to exploration since 1978. So for 4 years, this area was left unexplored while major discoveries were being made across Western Australia and the rest of the country. This is an exploration geo's dream. The early explorers and previous companies had identified these outcropping lodes and they'd sampled them, but we believe that the major prize resides undercover, beneath black soil plains that are geochemically inert, and so the vast majority of exploration in the past had been largely geophysically driven. In 2021, we made the Orion discovery. We had intercepts like 16 meters at 2.5% copper, 40 grams per ton silver, 6 grams per ton gold, and 0.4 cobalt. Now, I remember walking through the head-high grass, and I remember putting this peg into the ground, and later on seeing the drill rig come through, and this black tuft of smoke releasing from the top while the mineralization was intersected. I remember seeing Jesse, this big buff offsider, struggle to carry the sample bucket under the sheer weight of this polymetallic massive sulfide deposit. Dean, our MD, arrived on site later that day. We showed him what we'd intercepted, and he collapsed on the floor of the caravan. Now, the reason I'm sharing this story is because these are the moments that we as exploration geos live for. It's the moments that we work for. And these are the discovery moments on site that ultimately drive shareholder value back here. So what did we learn from this project? Well, unlike Mount Isa and Cloncurry, where the cover is 20, 40, 60 meters thick, our project only had an average of 4 meters of this black soil cover across the entire project. So we realized that there was a dispersion blanket underneath this, and that if only we could penetrate this thin cover, we could then apply the geochemical techniques used across Western Australia and the rest of the country. So this is where the auger program came about. We planned our first pass auger on 200 by 40 meter grids, and then we infilled these grids based on the preliminary results. We've filled our target pipeline with over a dozen Orion lookalikes based on these copper, lead, zinc, and arsenic pathfinders. We've had boots on ground, walking vast swags of this project in front of the auger rig, taking rock chip samples and identifying new mineralization and new gossans like this one at Thunderer here with 40% copper and 160 grams silver. We follow this work up with ground EM. We've only just announced that. We announced that yesterday morning. Every single EM traverse that we conducted has returned a conductor over our geochemical anomalies. We're extremely excited to get up here and unlock the potential that we know resides at Taraji Yampi. So what does this year look like for us? Well, in a couple of months, we're going to be mobilizing an RC rig and a diamond rig. Orion itself has only been tested for the top 120 meters. Our magnetic inversion and our phlegm plate suggest that it could extend down to 500 meters depth. So we're going to be testing the down dip extension of this and the lateral extensions. Meanwhile, the RC rig is going to be running around on all of our regional targets as we look to try and identify a camp scale with 20 million tons of copper resource potential. We see Taraji Yampi as an Avanco style opportunity, and we want to be in a position there next year to be delivering what we're delivering on the rare earths this year. So moving on to Central Yilgarn and Bresnahan. Central Yilgarn, we've got a large strategic land package here covering 200 kilometers of greenstone belts in the goldfields regions of Western Australia. This project provides us with high priority gold, nickel, copper, PGE, and LCT pegmatite opportunities. We have geophysical and geochemical crews on ground as we speak, generating and defining targets for drilling late 2023, 2024. And finally, last but not least, on our Bresnahan project, you've heard me talk about yin and the light rare earths there. We pegged Bresnahan as this conceptual greenfields opportunity for heavy rare earths, having identified the Bresnahan Basin and the underlying Wheatley group as a similar geological region to Northern Minerals Browns Range project and the Athabasca Basin in Canada. We did a field recce in late 2022, and we confirmed dysprosium and terbium heavy rare earths. And not only that, Glenn mentioned it before, we also found high-grade gold, silver rock chips, 11 grams per tonne gold, 700 grams silver from the Monster prospect. We've just flown high-resolution magnetic imagery. We're going to target the unconformity for heavy rare earths. We're going to identify the prospective structures and test these structures and advance this project in the background. So the upcoming catalysts, we're going to be drilling out the rare earths. We're going to be putting out a maiden resource on the carbonatites and providing resource updates on the ironstones. We'll be advancing the early stage exploration at Bresnahan. On the base metals front, we'll be drilling up in the Kimberley, testing the extensive Orion, and testing our high priority regional targets as we look to define this camp. We'll be drilling the strong EM conductors on the nickel copper PGEs in Mangaroon with First Quantum and lining up targets at Central Yilgarn. And finally, on the gold front, we'll be testing the high-grade Star of Mangaroon, as well as chasing the host structures undercover for repeats of these occurrences. So to wrap things up, we're a highly active company with strong news flow across our project. We've got large strategic land packages, which are highly prospective for a range of different commodities. We've proven that we can make discoveries and generate shareholder value, and we have a highly experienced board and management that are strongly aligned with shareholders. So it's about time I head back to site, but whether the waves are crashing and the winds are howling, the Dreadnought will remain full steam ahead. Thank you.
Good on you, Nick Chapman. Not a bad little maiden resource there. Can you put your hands together for him again, everyone? It is quite daunting to be here for your very first time. Good on you, buddy. Well done. And you can go and find out which Chapman he's related to, possibly the good-looking one. His dad will probably tell you, I would say. We are going to have a break. I will ring the bell as usual. And when we come back, we're talking petroleum, gas, uranium, helium. So if you're interested in any of those, it's a place to be. And I will do my best